What's up, guys? So right now I'm going to show you how I made over 170 USD trading Australian dollar USD in a single day and in a single trade. Right now this is Australian dollar USD pair that I entered, and you can see where I entered from. I entered from this point. It hit my stop loss, my TP at this area, and this market and made the analysis before even this week could begin, because I posted the video making the analysis on this pair. And one thing I say and I remember saying is that this market is not going to go above this zone. It will not continue moving with this momentum after the news that made this candle form. What made me believe that this market is not gonna buy is the fact that in a daily time frame we have an underblock, and we have an imbalance. And once you see an imbalance, be sure that the market will go down to tap that imbalance before we can now continue moving upwards. Now this is a daily time frame. You can see after this break of structure, the market started reversing, and it is now retracing at this point. Now this is the imbalance that I'm talking about. There is this piece that is right here, then we have an extreme underblock right here. Now I believe that this market will go down and tap this region before picking momentum and start buying, targeting the swing high. And the swing high is this high here. I believe that the market will go there. Once it touches this order block, we should target this high. Now that's where we are. That's I want us to go back to the trade that I took, because I think that was the purpose for making this video, and what I've just talked about was just meant for just education purposes for those who may wish to learn, to know what how I entered the market. So I was confident that the market is moving in a downward direction. I trained in the my lower time frame is 1 hour. Sometimes I can go even to 15, but today I was much concerned about 1 hour time frame. 1 hour time frame. So my higher time frame is 1 day. The medium is 4 minutes. The lower time frame is 1 hour. So if you look at this 1 hour chart, you will see when you are analyzing this chart on weekend, the market was at this point, and you see after opening on Monday, the market rebounded at this point. So over the weekend, there was this downward move all the way to this point, which means that the market went down during the weekend. So I don't know where we are getting these drawings. Yeah, so over the weekend, the market moved down, moved to this point. Now you can see there was an uptrend at this point. There was this trending upward trading with the formation of these structures. Let me show you the structures. There was this high, the market reached this point, then went again this point, Yeah, so there was that formation like that one. Then there were these breaks structures, like there was this was BOS. So was one break of structures. Break of structure there. Then there was this another one right at this point. There was another one at that point. You can see there was those breaks of structures. Let me make it a little bit wider so that you can see what I'm talking about. So that's what there was. There was this breaks of structure in this uptrend with this kind of formation, and then when the market opened, there was this drop. This was just a signal. If you were using a trend line, maybe you could see that it broke below this line. You could have entered at this point after small retracement, after you could enter at the fair value gap, although I do not see any fair value gap at this point. Then they are all been covered, but you can see the market just went up a little bit. So if you use trend line, could have entered around this point and have made your profits. So these are some of my confirmations. I use SMC, but I have knowledge of other strategies like SMC, price action, ICT concepts. I think those are classified as ICT concepts. Those smart money and transaction, I don't know. So I use several strategies according to the experience that I have in the market to know where the market is going to go the next minute. So you can see that the market went up, but you can see there was a change of character here, but it was identified using these small wicks. They were using these wicks, so there was no full body that could really make me enter this market. And the change of character is identified when the market breaks below. This is a support level, not a break of structure. So I think this is the lowest low that the market makes before breaking the structure. This was the lowest point the market went before finally breaking this structure. So I call it the support level. And once the market breaks below this region, so we have a change of character and change of the market and direction. So you can see the market changed because we spotted some change of character, but you could see it was just some weeks. So I do not really consider weeks, like consider them as a break of structure. So I have to see a full candle, full strong candle. Like this movement was the one that confirmed that indeed this market is continuing with the bullish momentum. And another thing is that I am targeting this market to reach here so that we can now be confident that this market is going to now start going upwards and start looking for the buying opportunities. So I was not in any fear that this market may actually start buying. So I just waited for retracement. You can see they went up, but at this point I was not looking at the charts, so I was not able to enter the market. So I waited to see whether this market will go back to this point so that I can enter the trade, because I did not want to enter when it had gone below this down here, because I knew if I enter this point, I will disadvantage myself, because the stop loss should be at least above this high at this point. So let me mark this region. Yeah, the stop loss should be at this point, so I did not want to enter the market, because the risk to reward ratio would be affected. So I just waited. When it touched this region, it was slightly lower than where I located my order block, but since I did not want to miss this trend and it was first of my week, I decided that using proper risk management, I'm gonna enter this market at this point, and reduce the area that the stop loss should be this, so that the risk to reward ratio can be 3.24. As you can see, as soon as I entered, the market continued with the bearish momentum. It took some hours. You can see it took how many candles? It took 1, 2, 3, 4, 5. 5 candles to hit my TP. And finally, I was out with 170 USD. And you can see the market is still bearish. I expect it to touch this zone, so that you can look for the buying opportunities. Thank you for watching. See you next video.